It's been a bit of a roller coaster year, and now obviously recession, and it looks like we're going into that. What does this mean from an economic perspective?
Well, yeah, it's been a pretty roller coaster year, as you mentioned there. That the UK markets have actually performed a lot better than the US markets, but then obviously 2021 was a huge year for the US. So we've got the Nasdaq currently down 33% on the year, and the FTSE is actually up just by 1%, but up on the year from this time last year. So the UK markets have done okay. I think one of the reasons for that is that they're fairly well weighted in things like commodity stocks. Shell, BP, Glencore all up 50% this year, so that's obviously done a good job in holding the index up. In terms of next year, it's tricky. I think it's going to be similarly volatile, certainly for the first half of the year, and I think. Personally, I think we've seen a rise in energy-related stocks. We've seen banking stocks doing okay towards the end of the year. We've had a big rally, 10-15% up towards the end of the year, sort of through November, end of October, and we've not seen the Santa rally that we would normally see. So normally December's quite positive, and it's not really been that this year. So I think going into next year, it's going to be quite tough. I think the markets will struggle a bit for the first quarter, maybe first few months. Maybe stabilise over the summer, but I think towards the end of the year, things are going to start to improve. There will be a little bit of light at the end of the tunnel.
It's good, Paddy, there to have a twang of optimism, at least in these dark times ahead. Now, I want to ask you about something. I was out with a friend the other night who works in the mining sector in Australia, and he was saying to me that mining, you mentioned mining as a good stock, and interestingly, Tesla stocks, Elon Musk's company, is 40% down in this last month. That could be because he spent £40 billion on Twitter. But I wonder, in terms of the energy sector, if there's a little bit of value in perhaps some fashionable things like coal.
Well, I think the key here is it's already been discounted somewhat. So yes, there could be some potential for these companies to do okay, but the share price to some extent has already discounted any potential rises. So in terms of stock picking, I wouldn't say it's a bad option for sure. But I think most of the move maybe has already been done. But as I say, it's probably better than most, but it's not going to be stellar, I don't believe, not in the first half.
So are the markets now happy that they've got Rishi Sunak at the helm? Because things seem to have calmed down a bit.
They're certainly happier than they were with Liz Truss at the helm, to be honest. That was quite a disaster. I think the thought behind the stimulating package that was given was correct, but the timing was completely wrong. And I think what the markets want is a bit of boring stability, and I think they want to be seen to be the government needs to be seen to be fiscally prudent and not borrowing too much if they can help it. Truss and Kwasi Kwarteng were literally just going into the magic money tree and borrowing billions and billions, which is the wrong time to do that. So I think the markets definitely have settled off the back of Rishi Sunak coming in. I mean, as I said, there was a very nice rally from mid-October through to the end of November, which I think reflected the positive view. And I think he's going to continue to be prudent. There's going to be obviously the battle for wage rises for a lot of people in the country, and some agreement will come, but I don't know where it's going to end up, somewhere between what they're asking and what they're offering. So, but I think he's got to try to keep a lid on that. I think he's very conscious that if he offers double-digit pay rises, then it's going to fuel inflation again, which I think personally has just peaked in October.